So I wanted to do a video about LATAM, Latin American Airlines, big famous airline in South America, Latin America. I should say the story has a little bit of an embarrassing element to it because I fell for a bit of a hype. I saw some posts, I did some research, and I made a rash decision to get into a stock. Let's start with a little bit of history on the stock itself though. So the ticker symbol used to be LTM. At the beginning of the year, January 1st, the stock was around $10.47 per share. But as you know, as the health crisis started to move around the world, the stock started to plunge in February. And by that fateful day in the end of March, third week of March, the stock reached its low at $1.76 per share. Now, not only a couple of months later, then the company itself files for bankruptcy, but at the end of that trading day, the stock still only stood at $1.68. So it's not like the company's stock tanked because of the bankruptcy. It really wasn't affected too much. Now, a couple weeks later, that LTM starts to get a lot of volume. The stock starts to run up a little bit. It ran up a bit, then it pulled back. I saw the pullback and I said, I can get in at around 243, which I did, and do a covered call strategy where I can sell at the money covered calls and receive a pretty hefty premium. So I did it. I bought 500 shares at 243, sold a call at 56 cents, and right the next day, June 9th, the stock was up 345. I felt like a genius, right? $1 from where I bought it, it went up $1. And unfortunately, at that time, I looked at the calls. The calls hadn't fallen. So there was no movement on the calls, whereas the stock had shot up. And I was like, oh man. And maybe the calls had even gone up a little bit. It wasn't like it was flat. I think the calls had gotten up to 65 cents or something. And so I'm like, man, I'm actually down money on this trade. But that's okay because what happens is the volatility drives the call price higher. But I knew that if I waited a couple weeks, I would still come ahead on this trade. And would you know it, the same day, the company got delisted from NYSE. And that means that it trades on what's called pink sheets or over-the-counter market. Holy moly. So let's look at this trade the way I've looked at my other trades for like Digital Ally and such. I went into it with not much upside on the stock price. I bought the at-the-money call, but I was banking on collecting the premium and pocketing it at 100%. So $280 was the premium. It would have been a $315 total profit. The max loss was $935. And so if you did the profit into the loss, that was a 34% ROI in 11 days. And so I thought, okay, I'm going to put this $900 into the market and I'm going to get back out, $1,250. So that's not a bad couple of weeks. So I really got attracted to the juicy premium. And I didn't, it was a bankrupt company, and Hertz and other companies, the bankrupt companies, are trading really well. So the other consideration besides the premium was that the downside seemed pretty restricted. If you looked at the low of the company in March and then the stock price as well on the day it declared bankruptcy, my break even was actually pretty close to either of those. So I was like, okay, I would be at net $0. I think it's like $1.85 a share, and the lows were $1.76. It wasn't too far off the absolute lows. So the downside seemed like it had a floor. Well, now it's delisted. It's trading on the pink sheets under a new ticker. And I checked the price today. And today's the first day that I'm able to access it because my broker didn't have it listed yesterday. It's $1.75. So if I was just to say close it out, that was a $110 loss. Given that I'm at risk of $930, a $100 loss isn't so bad. I mean, that was you're willing to take a profit, you're willing to take a loss, I guess. But I wonder if I can avoid this loss. I wonder if I hold on to it. I mean, the options are going to expire worthless 7 days from today. And that's about 50, that's a few dollars of that. And the stock is still trading, again, with $1.75. That's around the bankruptcy price and the low of the stock market crash price. So it's not, it still seems to be abiding by this floor. I think what I can do is I can try to get out of the calls. And I saw that some calls had traded for 5 cents or 10 cents. The current price of the call is actually 20 cents. So if you look at the level 2s, you see that there are trades going in for lower than that. So I put a limit order in to get out of the calls for 10 cents. So I'm willing to pay a little bit, $50 on those 5 calls, to avoid having to wait a week for one. Because if the stock price does move up, then the price of the calls could also move up as well. And so if I can get out of the calls, then I can just hold on to the stock. My break-even is $1.87. It's currently $1.75. I can afford to wait a few days to see if it can be above $1.87. So I can even put in a limit order for $1.90 or $2 and just let that run good to canceled. So I think I'm going to try to get out of this without losing any money. And so that's my story of LATAM. Made a risky call, and so far it hasn't worked out, but it might just be break even, which is good enough.